Hi, this is Joe Rabil with Rabil Stock Research. So I want to start out the show talking about the 1, 2, 3 reversal and how I use it as a buy signal as the lower time frame. And you have to understand how to use this in multiple time frames. I'm going to go through that. I also want to show the complexities of when there's a trend line that might be a little gray area and you're trying to decide what to do. We lean on MACD and ADX to determine kind of how to handle that, and when we can be a little bit more aggressive in taking that 2 signal and not waiting for the 3. All right, we're going to go through that. I'm going to look at the commodities because there's some shifts taking place there I think that are worth talking about. And then we'll look at all the symbol requests that came through this week. Let's go ahead and get going. All right, so I'm looking at CRM, Salesforce.com, and I want to focus in on this area here, this pullback here, which is this pullback on the monthly chart. All right, let's just look at this weekly, and I want to focus in on the 1, 2, 3 and how you can be in an uptrend and then you break down, you break your trend line, you get moved to the downside, and you make a low, and then you make a lower high, and then another lower low, and that creates the ability to put a trend line in. Once we make a lower high, right, and it turns into a lower low, we have a pivotal point that we can draw a trend line from. As long as we're not passing through prices, we can draw that in. All right, so I would probably draw it from this doji bar here and connect it down this way. All right, now I know I'm on the right track on a trend line if it's very similar to the slope and or price of the 18. You see how this line, here's the 18 here, and when I draw my trend line in, it's very similar. It's almost overlapping with the 18. That's when I know I'm on the right track. If I have a trend line that's like this, and the moving average is way over here, or the slope is completely different, then I know I'm probably looking at a trend line that isn't all that relevant. All right, so I like to use that. Now, a break of that trend line to the upside is the 1. Okay, and I have drawn this pretty tight. Now we had this little violation here. You could have seen that as the break of the trend line, and then we came back and tested. All right. Now, if you were drawing it a little bit looser, you might not have felt like that was a true break. And in this case, it really doesn't necessarily matter. And most of the time when I'm drawing these trend lines, it's pretty obvious whether we're having a violation or not. But in this case, let's just look at this and say that wasn't a trend line break. We make a move in here, and then and that's truly a break of the trend line. And then we come back and test. So in either case, this could be the 2 or this could be the 2. All right. And what I'll tell you is that we're looking for the potential for a reversal here. All right. And the reason why, and so when the 18 crosses down below the 40, in most cases, if you're looking at this as a single time frame, that would be a negative, wouldn't it? I mean, if the 18 is crossing down below the 40, all of a sudden we have the short-term moving average crossing down below the longer-term moving average. This should be a negative. This should be the start of a downtrend. However, what I do and what I talk about in my book and my courses in this one specific pattern that we're trying to identify is when this is developing on a weekly chart. All right. And then we go and we look at what's happening above the higher time frame. All right. So let's look at this and recognize that that pullback here was just a pullback to a rising 18-month line. All right. It happened prior as well, but this was, you had this deep pullback. We started to find support, and then we came back and tested it again. All right. And so when we see that on 2 time frames like this, I see this pattern instantly. I know what I'm looking for. I want to go and see how this looks on the higher time frame. We had good momentum characteristics. The MACD was actually a pinch play. And so I know I'm looking for a turn to the upside. All right. Now, what I'll say is that we can wait for the 3. So if I draw in my trend line, especially on this tighter one, if we break the trend line, this is the 1, this is the 2, and then the 3 would be coming back up above this prior high. That would be the 3. That would be on this bar right here. All right. Now, if I'm doing this really tight like this and it's happening below both moving averages and the MACD is overrun, all right, and we're showing a little bit of selling pressure on this time frame based on the red DI, then I'm probably waiting for the 3. Okay, but if I wait for, let's say I have this trend line that looks a little looser and it's not exactly a trend line break on the first go, all right? And we get a move up and then we come back and test. On this move coming back here, I don't necessarily have to wait for this to break out. And the reason is that I've already tested MACD. MACD is showing signs of improvement. I've already shown a dissipation of sellers. The sellers have dropped down, the ADX has dropped down, and we're turning back to the upside. And again, I know the higher time frame is in my favor. So I can get in as this is making a higher low. I don't have to wait for the higher high. All right. Now, this will only be the case if I have a higher time frame that looks really good, that's sitting on the 18, has a rising 18 that's above the 40, has good momentum characteristics on both the ADX as well as the MACD. And if I have that, then yeah, I'm probably going to jump the gun in a lot of cases and get in ahead of this breakout just because I have a lot of evidence using 2 time frames. Using this extra time frame as a backdrop for me, it can act as a huge level of support underneath, and I can be a little bit more aggressive. So yeah, it's not always going to be clear cut, which is the trend line break and all that. But if you're following your rules, you're pretty much looking to play the 2 or the 3. And if the 2 is not clear cut, and in this case, your 2 would have been below, still well below, prior resistance. You still had a lot of weakness based on the MACD and the ADX. Then I'm probably waiting for a little bit more evidence and taking this second setup anyway. All right. So just keep these things in mind. I think as you start to look at this 1, 2, 3 pattern, I think it can come in really handy on pullbacks. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. All right, so I've got the commodities here, and I'm going to go through each one. One of the things I wanted to point out is that look at the big move that gold has made. So I've got a weekly chart up, and I've got the 18 simple moving average and the 40 simple moving average on the weekly chart of all of these commodities. And at the bottom, I've got a relative strength line and a moving average along with it. Now, the interesting thing is that look at the move that gold has made, and it's only basically just kept pace with the S&P. It hasn't actually outperformed, even though it's made a pretty significant move here. It's one of the only commodities that really has kept pace because everything else has been dropping. But you can see as we start to look at the relative performance lines in these other commodities, look at what's going on with soybeans starting to turn the corner. Now, if I start to draw in trend lines in this stuff, you can see we're breaking that trend line. Look at corn. Corn is breaking its trend line, starting to turn up from that. We haven't seen much in wheat yet, no real improvement. But look at what's taking place in the oil chart. That's pretty significant. I'm going to talk about an oil stock as we move into the stocks in a bit. There's some pretty important developments taking place in energy. And then we've got the same sort of pattern developing in the silver, where it's basically kept pace over the past year or 2 with the S&P, maybe slightly underperformed, but even though the price is in a pretty strong position. But look at what's going on with copper. Copper's starting to turn the corner, breaking the trend line. Now, all of these are still below their moving averages, or at least around their moving average, and the moving averages hasn't turned up. But if we get a little bit more of a push, we turn down and test and turn around, we're going to get that moving averages turning as we're completing a 1, 2, 3 of the relative strength lines, right? So we want to kind of keep an eye out for that as they develop, but lots of improvement as we start to go through these when we start to compare them versus the market. And Cocoa is even making a really strong move here, pretty dynamic looking pattern after breaking the downtrend line and now pausing right above this key level. So anyway, I thought this was worth spending a few minutes on. We definitely want to start looking for some of the commodity patterns, commodity stocks, see what the copper stocks that are holding up like this, see if we get a little bit more improvement in copper. That could be pretty interesting from that standpoint. And again, we'll talk a little bit more about energy as we move on. All right, let's look at the QQQ because we've got sort of an interesting development taking place with the market up so much right now. We're still in this sort of extended region where we've been pretty far away from the 18-month now for quite some time. But we've got decent momentum conditions when we look at the longer time frame. This doesn't look like the type of pattern that's just going to fall apart to me, but we have to be on the lookout for signs of a reversal to the downside because we don't have any real strength in this last leg. This last leg to the upside has no strength behind it because the ADX can't even get above 20. I mean, I usually like to look to see if it can get above 25, but we need this to get above the above that 25 level, and hasn't been able to pull that off. And now we've come down to test the 18-week. Now, the S&P actually broke the 18-week line and is trying to reverse off that. But the S&P also has a reverse divergence pattern where the MACD has made a lower low and price is making a higher low. I'm going to go into that in a lot more detail on my YouTube channel for Friday morning. So if you want to, if you have an interest in learning or hearing more about the S&P and all the things that I'm looking at with that, you can tune in then. But for this chart, I would say, you know, we've got a little bit of overrun here. We don't have a lot of strength, but we're sitting on the 18. So I kind of look at this like the last move to the upside was confirmed in MACD. So if I compare the last peak to this peak, it did make a higher high. So it could get another trading move here. I would only treat it as a trading move because we don't have any strength in the higher time frame. All right. I mean, so in other words, if I'm going to play this off the daily, breaking the downtrend line, let me just draw this in. If we can break this downtrend line pretty close to the slope and price of the 18. So I think that trend line qualifies. We're probably going to need a little bit more confidence with a higher low or a test to the 18 or something like that. But this could be a viable trade. I think you're going to have to be a little bit nimble just because of the fact that the ADX really isn't in a position to create a dynamic move to the upside. Doesn't mean we can't trade a little bit higher if it plays out that way. But right now, we're sitting on a declining 18-day, all right? The question becomes how this handles this area here over the next 24 hours. Do we get through that line and push up towards 525? And if so, I think that would be a pretty good short-term sign. If we fail right here and start to turn down, especially with the news that we got this morning on a tame inflation number, I would start to get a little bit more concerned that we're going to head our way down and do a deeper correction. All right, so something to keep an eye on. Now, if we look at the IWM, this is the one that's having the biggest day today, not by a huge amount, but it is, it definitely is getting a good rally, and we're reversing the weakness from last week by creating this big king bar, this big green bar to the upside. So I'm a little bit encouraged from that standpoint, but if you look at the momentum conditions, they're just not strong enough to think that we're just going to take off from here. All right, it's going to take a little bit of work. I do want to see this relative strength line keep improving. If we can get back above this prior peak up here, I'm going to start to feel a lot better about small caps and overall market environment. All right, so CTRA is an energy stock. Now, what I like to look for when energy, if you look at what energy did, a lot of them came and made lower lows. They kind of broke down their intermediate term trend. Very few broke their longer term support levels. All right, but what I'm looking for are the stocks that didn't break down at all. I mean, this is just a sideways consolidation. You can go look at something like EOG, or even better, look at what Baker Hughes did, BKR. That's actually breaking out. It never even pulled back, and that's at a new high. There's some other stocks in energy doing this that are definitely worth, I think, taking a hard look at. But look at what's taking place in this CTRA. You see how this is making a higher low while this is working its way back down towards zero and making a lower low. We don't have any selling strength. We didn't have any selling strength here. And now we're getting this weekly chart to kind of break out of this base. I mean, this is a good stock. Look at what the relative strength line is doing. We can see that starting to show signs of improvement. Certainly worth keeping a close eye on. Now, one thing I did want to point out, I'm only doing the monthly, weekly, daily, and then an extra weekly this week. I don't have any, there weren't any short-term questions, so I figured I'd leave the hourly off, and we can get a little bit better look of each one of these time frames. All right, so I had a really good question regarding this VST. Gentleman had bought this pullback play, looking at this reversal. Now, there are some complexities to the 1, 2, 3 where you don't necessarily have to wait for an extra pullback. But again, that's based on what's taken place in the MACD and the ADX. All of this is covered in my first course. I go through that in detail. All right, so what I would say is his question was, is it too late to play this because we're so extended on the monthly? All right. Now, what I like to look at is if we've gone through a complex correction. So this qualifies as a complex correction because we didn't just have a simple pullback. We pulled back, we made a lower high, lower low, and then another lower high, and then a higher low. So to me, this is more complex. Once we've done that, and then we break out again, I'm looking for two simple pullbacks. So this is a simple pullback, another simple pullback. These look like bull flags. I can play two of these. Now, the next time I'm probably thinking, maybe this can try and push to 200 or something like that. And then I'm looking for another complex correction. So that would be the next thing I would be looking for here in this situation. So just something to keep an eye on. When you're looking at a trade and deciding whether you should play that pullback, look and see when the last complex correction was. Now, it might be merging out of a basing pattern, and then you get two bull flags, but just play the first two, and then I think you're going to be a little bit safer. All right, let's look at this Upwork. Look at what's going on the monthly chart. We're getting this monthly 18 to turn up for the first time in quite some time. I like the volume on this last leg here. And in fact, the volume was pretty good moving back here. So we've been going through a little bit of accumulation. And now if we look at the weekly chart, we've got this sideways pattern we just broke out of, right? And now we're setting back, forming a pinch play with strong momentum after coming out of a low ADX condition. And this is a good stock. This is in a good position. We're getting a little bit of a signal here potentially on the daily chart. Overall pattern looks good. Even the RSI 5 on the weekly has come back and pulled back and given us an RSI signal. So I like this as a setup. Okay, look at the Paychex. This is another one that I think looks attractive. And I think the person who emailed was actually looking to compare Upwork versus the Paychex. I think both of these look good. I think the Upwork is probably a little bit more of a dynamic pattern, and this is more of a steady Eddie type of a stock that has a big base, has good momentum conditions. But because there's been overrun here, I wouldn't be surprised if this hesitates first. So if you're looking for something a little bit more on the conservative end of the spectrum, this is probably the way to go. But it might take a little bit of time to really set up. We're probably going to need a pullback here, testing 140. But certainly a name that could be considered. It looks pretty attractive. All right, if we look at this Harmony Gold, I like how this is pulled back to the 18-month. We've got a lot of strength in the momentum on the higher time frame, but it's really early on the lower time frame weekly. It's come back to the zero line, and it has no strength on the downside, but I think we need a little bit more convincing evidence that it's ready to turn. Okay, look at the Palo Alto. So Palo Alto just recently broke its 18-week line, and it kind of re-entered this breakout level here. So I'm of the opinion that this is going through a little bit of a consolidation correction pattern. I'm not all that concerned because we're still above a rising 18-month line. We've still got good momentum conditions in place, but I think it's going to take a little bit of time to work this off. One of the reasons it's bothering me is that it came up to this big round number at 200 and reversed after trying to break out. So I call that a failed new high. And you can see that we didn't hit 25 on the ADX. So a little bit of a concern from that standpoint that that it's losing a little momentum. We're losing a little bit of relative strength. I don't think it's going to fall apart. I just think it might take a little bit of time to get itself up and going. Might take a little mending. Now, Blackrock, I think, is pretty impressive. Another one where the momentum on the weekly chart is showing a lot of strength. But during this pullback, and you can see the violence of this pullback, we created this overrun in the MACD signal line. Now, it's above zero, all right? So what I see a lot of times is we'll go up, and a lot of times it'll be about the 50% mark, and then we'll come back down and test, and that test will be very important. If we make a higher low or even a double bottom, and then we can turn back up above this high, then I think it looks a lot more attractive. So I think we just have to be a little bit patient in this. That might buy us a little bit of time and let this pull back closer to the 18-month line. Thanks for watching today. If you have any stock requests, send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, if you want to learn more about some of the techniques using multiple time frames, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.